Felix here, guys. Good evening from Hong Kong. Welcome to a live chat. It's been a few days since I've seen you last. It's fantastic to have you on the chat here. I see a lot of familiar faces here. Matthias, Robert, Lily, Baba, Vladimir, Lufix there. Fantastic to see you guys. Welcome to this chat. What's our typical format? Well, I sort of run through a couple of news stories and you are very, very welcome to ask questions. I will aim to answer every one of them. So as always, guys, please remember this is just not financial advice. This is just for entertainment only. And let me pull open some of the exciting things we've got here. Well, the first thing, of course, is that for every one of your likes, guys, I donate 1 cent to the Farm Sanctuary this month. These lovely, fluffy creatures here. So keep smashing and destroying that like button, guys. And hopefully we'll send them more than $400 this month. That's really the goal here. Now, and then we'll get into the news straight away. Well, why don't we kick it off with Neo, followed by Palantir and Barber and anything else you want to do for no particular reason in that order. Luis, Chris, CH, La Jolly, Mike, lots of you guys here. Good morning to you or good evening to you, depending on where you are in the world. On Neo, you might have seen me post this over here in the Discord earlier today. I posted this screenshot, which I've got on here as well, and a little bit bigger. And what does it really show? Well, my enormous head blocks some of it, which isn't particularly helpful, but there we are. So you can see the blue line here is the stock price. Can I make that a bit bigger? Yes, I can. The blue line is the Neo stock price sort of sadly tumbling down here, though not so sad the last 2 days. And we're going to get to that. We're going to get to the chart and what it really means. And the black line here is the average price target of analysts. And by average, I mean exactly that. Take all of them together, divide them by their number, and there you have it. The lowest one is at 36.55 or so. I think that's Jefferies, the New York investment bank who loathes EVs for some reason. I have no idea why. Perhaps, I don't know. I don't want to speculate, but they really have, I think their price target for Tesla is something like $150 or something. They're really not on the EV trend. And then the highest one's $90. Actually, I can think of some Chinese ones that are at $100, but there we have it. So the difference here, and that's what that second lower chart shows, is this is the difference between where we are and what the target price is from analysts on average. So there is something like a 63% upside differential here, which is pretty substantial, I would say. Matthew Hammond, why does anybody care about Neo? Well, perhaps they're invested in it, Matthew. I think that might have something to do with it. And this is what the chart looks like at the moment, which is rather interesting. And what I'm going to do, actually, I'm going to take you back in history just a little bit here. So you saw our peaks here in the sort of 60s in, late January, early February. And what was happening before that? Well, we got this triple dip here, and I put in 1, 2, 3. Brett, greetings to you too. This 1, 2, 3 was our pattern. And how does that really work? What do I mean by that? What's the whole point of this triple dip? What is it all about? Well, you get a negative trend. That here is the negative trend, right? And you hit a point where the buyers sort of wrestle it out with the sellers, and they win that round and they go back up. And that's, as far as they can go. The sellers win again. We go back down a bit. And then it reverses again. The buyers win and the sellers lose at that point. And we keep going up. And we do that 3 times. And at the third point, we then go up here. And at that point, the sellers are just like, forget it. I give up. This thing is going to go up no matter what I do. And that is when you get a trend inversion, if you will. The trend is turned around. So in a short sense, you've created a V, but you've done it a little bit more dramatically through these dips here. And that's really what caused that massive rally we had there. Now, what are we doing at the moment? Are we at the same sort of point? Well, nearly. And the nearly part is very important because you can see we have a negative trend. Yes, from all the way down to this 0.1, we rally back up into, the sort of mid 40s. We go back down again. People are still bearish, and then the bulls win again, and then the bears win again. And now the last couple of days, the bulls are winning again. So you could say from that point of view, well, that's a triple dip, isn't it? Not quite. And this is my professor finger here telling you off. No, it isn't quite that. So what it really is we are very near it. But for this pattern to form, we need this bit here too. And I'm going to make that a different color. You need that bit there, and it needs to cross about the 4150 line. Why, you wonder? Because the peak of that previous the bit in between the dips, the previous peak, basically, that one I'm pointing at here, that was at about 41.56. I am 1 cent off here. That's what you need to cross. You cross that, then your triple dip really gives you a buy signal, a big bullish buy signal. And that's the same thing that happened over here. The buy signal kicked in around $49 at that point. So there is another one, though. There is another indicator in here. Now, these are the two green lines. And actually, some of you guys over on the Discord were sharing that yesterday or so as well. I don't know where it's gone. It's on here somewhere. So much information on here. But you can see these two green lines are put in. So how does that work? You connect the lowest points at the bottom, and then you connect the highs from the top. So I did that yesterday. And then you get a triangle. And how that works is the stock sort of gets pushed into the apex of that triangle. And then if you come out to the top, that's a buy signal. If you go through the bottom, it's a sell signal. Yesterday looks very much like we broke out through the top. So that is a buy signal. Now, someone here throws out, Robert, quadruple dip. Possible, of course, everything is possible. And that's why I'm saying you need to get back to 4150 to actually get this completed. It is still, as you say, if you are a little bit miserable today, possible that you go back down and you form a fourth dip, and then you can keep doing that. So that's what I'm saying. At the moment, from the triple dip point of view, this isn't entirely formed yet until we go to about 4150. However, the triangle pattern here, which is also a good and separate technical indicator, gives us something positive. Now, pre-market here, we're looking at 0.36% up, which is quite good, because I find when it's very green in pre-market, we typically have a terrible day, and vice versa. So that's kind of the quick chat rundown here on this. Now, in terms of news, William Lee said yesterday that he thought EV penetration in China would double within 2 years. At the moment, it's about 8.8% for pure EVs, about 10% if you include the sort of in-between EVs. Now, China sold about 21 million cars last year. I think that's going to go up to somewhere close to 25 million cars per year, because it's actually still growing as a market overall. So 20% of that, that's 5 million EVs that could be sold in China. And that, of course, gives NIO also a huge opportunity to grow in that premium sector. And you can also see why he's very keen to push out another mass market brand, not under the NIO brand, but under that umbrella, because he wants to get some of that. What's my position in NIO, says Juan Raul here. I'm long on it. That's my position, very long on it. So that's kind of the quick update on this one here. Do, of course, shout things out, guys, but let's have a quick look at Palantir here. And there are a couple of bits on Palantir that are quite interesting. One is, and I'm going to play you a short little clip here, hence me putting on some sort of headset here. There we have it. So the COO of Palantir today spoke to Bloomberg this morning, basically when most of you were probably asleep, soundly asleep, dreaming of rising stock prices. And he said a few interesting things here. I'm going to play you just two very short clips. So let me just turn the desktop audio on for you, and I'll zip it.
Simply because they're locked into old platforms.
Now, Kathy Wood's ARK Invest just added you to their fund. She's got a huge retail following. Just today, there's been a ton of chatter online among retail investors about Palantir. How do you feel about this new interest?
We're proud of our investor base. We're excited by the folks who are cheering us on and really believe in our long-term vision here. I would reiterate Alex's position in our own. I've been at Palantir for 15 years. I certainly hope that I'll be lucky enough to be here for 15 more. And we're building a really sustainable business for the long term that we think can be one of the most important software companies in the world.
Did you hear him say that? He thinks it's going to be one of the most successful and one of the most important, rather, software companies in the world. that is the kind of bullish sentiment I like from management. He is saying he hopes to be there for 15 years and he thinks they're building one of the most successful software companies in the world. And to me, that is sort of, Microsoft type level, Oracle's, Microsoft, those kind of like massive sort of IT companies. That's, I think, where they basically want to be. And I think a lot of investors don't seem to realize that. They want to make a quick buck in a couple of weeks, and that really isn't their plan. Now, there's another little snippet of joy in here, which I'm also going to play you.
We've had 30 offices or so around the world for a long time now. And for this next phase of our growth here, as we grow substantially with industrials, manufacturing companies, and healthcare, Denver is really the right home for us.
Did you hear that? His part about the growth?
As we grow substantially with industrials, manufacturing companies, and healthcare.
As we grow substantially with manufacturing, healthcare, and industrial. So again, very, very bullish words here. The second time this week from Palantir, and they're not usually particularly aggressive on their promotion, are they? They don't usually say very much. But we had Alex at the beginning of the week talking about tremendous growth in the US at the moment. And here again, we have the COO basically telling us the same thing just a few days later. So I think they really are kind of building up expectation and momentum towards the earnings call, which is on the 13th of May, guys. And of course, we will live stream that here. Make sure you are subscribed and make sure you turn the little alarm bells on. Otherwise, YouTube might decide it isn't for you. They have a habit of hiding things from you unless you turn that little alarm bell on. So similarly here, again, the blue line is the stock price, and the black line is the average analyst price target. So again, we are substantially below the analyst price target here, which is fairly unusual for a growth stock like this. So there is at the moment to the average a 13% upside, and I think most analysts are pretty conservative on Palantir. I think, quite frankly, they don't really understand it here. The high ones are sitting at $40, the average here $25.50. Now, from a chart point of view, we are actually looking at a similar pattern here. Not quite the same and not quite as bullish as NEO is, but nevertheless, I think we should have a look at it. It is interesting. So similar story in that you have a sell-off trend. Most of us are familiar with that. We are holding Palantir here. So we hit one low, we go up again. We hit another low, which is lower than the first one. That's what I didn't like about that particular low. In my low number 2, and we go up again, and now we are down here. So are we at a dip yet? Well, the last day you can see we did, of course, close quite a lot higher than the previous one. So it would look like this V shape is building. But again, for this pattern to really complete itself, we need to go back up here to about the 25.45 line. That is basically what will give us major momentum if we can go above that. So watch out for that. Again, pre-market stock is looking up. Hopefully that will hold. Hans, good to have you on here. One of our lovely members. You are saying people should hit that like button. I agree with you, Hans, if you enjoy it. And the other thing, even if you don't enjoy it, but you enjoy fluffy creatures, guys, I donate 1 cent for every one of your likes to the Farm Sanctuary here. And we've so far donated $690 in the last 2 months alone. So make April count for that. Now, the not so fantastic news is I got this email this morning from the United States Securities and Exchange Commission, rather serious. Alex Karp has been on the sell button again. Someone should just take his brokerage accounts away from him, right? Just take away the man's phone and say you are forbidden from calling a broker or using any kind of brokerage software. What has he done? Well, he sold some shares. And to show this is always kind of complicated because he gets stock options. So these are the green ones, which he buys. And then the red ones are the disposals he sells, and it gives you the prices he's selling at. And it's always, employee stock options. You can see he got them at 10 cents. Is that really it? The price he could, yeah. Tremendous. So he gets them at 10 cents. They're worth $23. So he has a taxable gain instantly like that, which he has to cover. Why does he have to cover it? Doesn't the man have enough money? Well, sadly not. The problem is, and here you have have it in a little bit more of an easier way to see it. So he sold 1.9 million shares. If he gets 1.9 million shares, and let me put that into a calculator because my Head doesn't want to do that. And say he made a $22 gain on that. That's 41 million US dollars, or 42 million US dollars perhaps. His cash salary is 900,000 US dollars. So no matter what the man's tax rate is or where you live in the world, you can understand that his tax bill will be substantially more than his cash salary. So the problem really is that the chap is totally underpaid in terms of cash and rather generously paid in terms of stocks. And that isn't going to change anytime soon. So we are going to keep seeing this at the current rate for the next 7 or 8 years. That's basically what the numbers show. And if you want to understand why, again, hop over to my Patreon, guys, and you will see this chart over here. And these are all the incentives plans that the company has. This is taken from their S1 filing, their pre-IPO filing, and it shows you. So he's obviously getting under this 2009 standalone option agreement. He's getting 61 million shares or so. But in total, there are 1.3 billion shares. And these guys are not getting paid a lot of cash. They're obviously getting paid very well in stocks, but not in cash. So what is he doing? He's basically seems to be allergic to keeping much more than 6.4 million shares of Palantir. Previously, he sold 2.5 million here in early April. He had 6.428 million. And then before that, a bit further down in February, he had 6.426 million. So at least he's adding 2,000 shares a month or so to his holding. But that obviously isn't very much. There are probably people on this call who have that number of shares in Palantir. So it is a story that will continue. I think at some point, the market is going to get used to this, much like it's getting used to inflation. Matthew, can he not just hold them and not get taxed? No. Because when a company gives you, pretty much everywhere in the world, gives you a benefit in kind, say they give you a car to drive, you still pay income tax on that. It is essentially income. And governments do not care how you're given it, whether you're given it in food, cars, stocks, flats, houses, any kind of benefit typically gets taxed. So you can't, like if you're trading, you're buying shares and you're holding them, you might be able to defer your taxable gain there, but they cannot. The second they get paid them, they get them at, the 10 cents here. So he gets kind of a double whopper. He gets an income tax bill and a capital gains tax bill on that. So you can't do anything about that. Philco, great to have you on here. Robert, also fantastic to see you on here. Agalos is saying, how do you think that free Foundry offer is going to impact 2020-21 results? Agalos, you know what? I really like it. I think it's the first time we've seen Palantir make a bold marketing play here. They're not giving you Foundry for free. They are just giving you access to your data. So they're going to send some engineer into your systems, and they're probably going to spend a couple of days there, and it'll cost them a couple of $1,000 US, or perhaps 5,000 or 10,000 US dollars, not that much really in the bigger scheme of things. And they're going to give you access to all your databases, all your systems, and they're going to put it together. And then they're probably going to show you that screen and go, look, this is all the data you have. This is what's happening. And then I imagine they're going to do a Foundry demo, and they're going to say, look, Foundry just said you should do this and this and this. I think this would have saved you $5 million. Do you want to buy the software, or shall I turn it back off? I think that is kind of the sales pitch here. And once you have opened people's eyes to what they actually own in terms of data and what they have and how they could act better on it, they don't typically want to go back. It seems like a silly move. So I think they are going to do this, they said, only with basically the largest companies, the ones with the most employees, the ones that matter most to the industry. So they can cherry pick. And they can just call the S&P 500 and basically say, hey guys, do you want us to do this for you for free? We do this for your competitor already. It won't cost you anything at all. If you don't like it, we'll turn it back off. And that's sort of I think most COOs, most IT heads will just say, well, why not? They're coming for free. No risk, right? Let's just let's see what they can actually do. And that is a lowering the entry barrier from, hey, do you want to potentially have a meeting and buy our software? It'll probably cost you at least $1 million a year, maybe 5 or 10. That's a pretty tough sales call. So I think rather than hiring salespeople and having them travel about and fly about and racking up expenses, just send your engineers. They know the software. They're going to be able to talk to the IT guys in those companies. Therefore, they'll build those kind of smarter relationships with those IT guys. And I think that should really pay dividends. Probably we are not really going to see that till Q4 or maybe Q1 2022 for that to really pay off. But I love the strategy. I think it's a fantastic one. Baba earnings call. We obviously are going to cover that. When is Alibaba? I haven't got it on my list yet, but yes, we will definitely do that. Alibaba, I think the numbers should be good. I think it should have been a good quarter for them. We'll definitely cover that here. That should be a really interesting one. I think what will be really interesting there is what difference has the cloud revenue made, rather profitability made, because we saw in the previous quarter, there was just a teeny tiny bit of profitability there from cloud. And if you look at the current margins of Alibaba, and I actually, funnily enough, have that open here. Here it is. Here is Alibaba. Let me just show you their margins. This is Alibaba. Gross profit margin is 43%. This is EBIT. EBIT margin is 16.6%, right? That is without cloud. And from what we are told, AWS has a profit margin of about 50%. So expect this number to go up. That's really what I'm looking forward to. May 20th, says Hans. Okay, I also thought it was a little bit further away. Otherwise, I would have put up the call already. Filco is saying, do you think this market correction is lasting longer than usual? Does it indicate an eventual market crash? It's a very good question, Filco. Let me see if I can pull up a chart somewhere, perhaps here. Let me pull up this one. Okay, we switched back into here. And just have a look at, I think it's always good to take these things with some perspective. And every time I get a little bit like, what's actually going on here with the market, this is what I do. I pull up the QQQ, the Nasdaq, and I scroll back a little bit to where we were last year. And where we were last year was, this is November 2022. Crikey, we have to make this a bit smaller, right? That was March. So last year in February, we were at about 237. We are now at 339. So we have had really a fantastic run. Do I think it's going to come crashing down massively? No, I don't, because I think governments are going to basically keep bailing us out. They're going to keep printing money and they're going to keep supporting the economy with cash. And people are hoping that COVID is coming to an end. I very much hope so too. And if it does, government's going to give more stimulus to industries that need it to recover. And if it does last longer, I think, again, governments are going to hand out more money to the industries that need it. So I think from that point of view, there is going to be more and more money sloshing around. And where is it going to go? Well, it's going to go to Wall Street. So I think we need to look at this from a kind of perspective. In 17th of February, we were at 338 or so. We are now actually at the same levels. We were slightly above that. So we are still very much on an uptrend. Now, what has gotten hit hardest, of course, were the stocks that performed or outperformed, I should say, the most. And that is, the likes of NEO. But again, make this a percentage scale. We are 500% up year on year. That is still pretty tremendous. And it's the same for say, Tesla. We're up 1,000% on the same time period. So you are talking about a crash, but it's from a very, very high level. I think there is every reason to think that we are going to rally past those points. But if we trade a little bit sideways, we dip a little bit down, you know what? I really don't mind. I just think it's the way the market works. The market zigs and zags. And for me personally, the best strategy is just to keep buying stuff and buy more of it when it's lower, provided, of course, I have a conviction on that particular stock. The Pltr earnings call is the 13th of May, Christian there. I will, of course, put up a live stream for that. So just make sure you're subscribed, turn on your alerts, and it'll pop up on your phone or wherever you watch YouTube. Robert, why is AWS margin so much better than Baba? Robert, apologies if I didn't really explain that. I was sort of running roughshod over that. So Amazon has a fully fledged AWS business, cloud business for some time, with allegedly about a 50% EBITDA margin. Alibaba is newer to this, and they have been pouring money into it, but they haven't actually really drawn a profit. They've just started to. But as they have sort of finished their investments and they have signed up the who's who of the Chinese company elite, most of the Chinese finance companies and certainly the majority of the top 100 Chinese companies are using Alibaba Cloud. The Tokyo Olympics is, the government is, the central bank is, everybody is basically. And that means once you no longer need to spend huge amounts on building, data centers and spending on the software, your profit starts to creep in. And that I expect that to creep in at the same margin to AWS, which means that at the moment, Alibaba's overall business, which is basically all e-commerce, has a 60% profit margin, 16, whereas Amazon has a couple of percent, right? What's Amazon's EBITDA margin? It's Finbox say? Are they going to tell us? It's 12% on EBITDA. So already Alibaba is better than Amazon, and Amazon has a profitable cloud business. Alibaba is only just beginning. So the point I'm trying to make is that we should see Alibaba's margins improve substantially further over Amazon's, because Amazon's e-commerce business has like a 2% margin or something. It's a fairly terrible business. And so it's all their profit and margin comes from cloud. Whereas for Alibaba at the moment, they already have 16%. They already have a better EBITDA margin than Amazon. And that's all coming from e-commerce. So just think ahead, that should go up quite substantially. Brett, you are right on the direct listings. I'm not a big fan of direct listings for that very reason, Brett. And the difference between sort of real IPOs and direct listings is that in a real IPO, the company issues shares and sells them to new people and therefore gets cash for that. And that cash can be invested to grow. Companies like Coinbase, Palantir, lots of other ones are doing direct placements. They are easier from a sort of regulatory point of view. They're cheaper. You control the price you list at and you sell at, but the company doesn't sell any shares. It's the existing shareholders that are selling shares. So it's basically your private equity guys cashing out. Now for Palantir, at least they don't need a huge amount of money to grow. They don't need billions like a car company. So it seems like a fair strategy, but it doesn't bring you the same benefit as a true IPO. The market is open. Fantastic for throwing that out here. Let's open a couple of things then. So we have a quick look here at our screener, see what's actually happening here. Bingo, Lukwang, Hillian, App, SOS, Palantir up at the moment above $23, 1.68. These are live by the second NASDAQ quotes. Who is in the doghouse? Alibaba for no particular reason. Coin not really recovering. For me, I was really on the edge of buying that on Monday, but then on Sunday I read about their CEO setting a very substantial stake at about $380 on the first day of trading. I don't like the sound of that, I must tell you. When you have the best quarter ever and you are just on the brink of this crypto boom and you'd think, well, maybe Q2 will be even better. Surely I'll hold on to a bit more of that, but he didn't. So for me, that's therefore I'm out basically on that front. Where is Lee up 1.5% here? Where is our friend Neo 1.44% up 39.46? We are edging towards $40 here. So it looks like a very green morning, which is always lovely to see. We can also pull that up if you like. Where is Neo? We can have a quick look at the trades. Where did the trades go? Normally on this software we get to see the trades. I don't know why we don't anymore. Maybe I need to open it like this. Weird. No, they've hidden it from us. Why? I quite like to get a feel for the volume on that. Oh no, it still is here. It's here still. Connect. Nope, there it is. So you can see the trades here. They're fairly sizable trades. Not that many people buy thousands of shares. So you can see that here popping on the right. And then if we look on this at a minute level, you can also see what's going on here at the beginning of the day. No massive jumps at the beginning of the day. That's actually quite nice to see. you see real continuity from the last day. Sometimes there is a big gap in between. Today there isn't. Darren, are you going to be doing a live stream on the NEO earnings day? What do you think? Of course, absolutely. Of course, I'll be doing that again. That is sometime in May. I haven't put that up yet, but absolutely. We are also, actually, no, that is up already, isn't it? I think I've put that up already. Yes, I have. I think it's the 29th of April, if I'm not mistaken. It's on my YouTube already. So it's from memory here. Tesla on the 26th of April. And even if you don't hold Tesla shares, if you are interested in the EV space, I think it's a must. And then 3 days later is NEO. So it'll be rather an interesting one to look at. Chris Jones, what's your average price for NEO? Chris, I saw your question earlier. I actually don't know the answer to that, which is just why I didn't want to admit that rather embarrassing fact, because I bought it through 2 different brokerages. But I'll calculate that and I'll let you know. CCIV dropping to 18 yesterday to the recent SPAC pressure. Yeah, I think SPACs are going to be coming under pressure. We also have the rumors, the new SEC chairman is apparently not as amenable to cryptos and SPACs. And I personally actually think the SPAC sector does need to be regulated. I think it's sort of the Wild West of investment, and we are allowing companies to list publicly and trade publicly that should really be in private equity stages. Now, there is a benefit to that. You could say it democratizes the investment. It means that you and I have access to what are essentially private equity stage companies, and we can invest in that. But, look at something like Quell, for example, Lilium, flying taxi thing. They are not going to have any revenue until 2024, yet they're listed. That's bizarre. You typically don't have those companies listed. Typically, that is dealt with private equity investors who, by their definition, have to be professional investors. That means typically people who have more than $1 million in investments. Now, that is somewhat an unfair and inequitable distinction. I totally get that. And it sort of keeps your average trader out. But it also keeps people away from massive risks, because some of those companies will go under for sure. So I think at least we need to think about the regulation there with the SPACs rather than just opening up the back door for everything. There is a reason there's a listing process, and just opening up all these backdoor listings, I don't know. I think in the long run, it doesn't really benefit the market very much. Robert, do you think NEO should be a tech licensing company? I think they will become a licensing company to some extent. I think they'll also become a component supplier. So battery components, powertrains, and those kind of things, and their software and operating system, perhaps their cloud, all those kind of things. Yes, absolutely. I think they should sell that. There is no real benefit on sitting on that stuff. I mean, Tesla says the same thing, right? I think I wouldn't be surprised if some point down the road, you're not going to find some major car companies being powered essentially by Tesla software. Damien's talking about Lee here. Okay, why don't we pull that open? Let me open. Actually, I need to go back on this one to the Palantir chart, because the charts are shared with our members. And they click on the Palantir chart and they get a NEO chart, they get confused. So let's have a quick look at Lee Auto then. Let me close this one. Okay, I'll just type in Lee. Sometimes that is faster. I mean, I think Lee is the most sort of conservative out of all the Chinese EV stocks. They will be profitable, I think, pretty soon. They're not spending a huge amount of money on sort of R&D and things like that. They're being very cost conscious. At the moment, the market isn't loving them for it, I would say. But then, the whole sector is a little bit in this kind of we are out of chips momentum at the moment. So where they are falling off to now, sort of 1830, while they've recovered above that, that was really the low point in October. So it did seem relatively attractive at that price point. I can see why people are buying in here. Momentum is improving. You can see that down here, but it's still not hugely fantastic on a relatively low volume here also. So I think there is a little bit of this enthusiasm out to indiscriminately buy everything and anything. And I think what Deutsche Bank put out the other day, this sort of thought that, not every EV company and startup is going to succeed. I think that's going to sink in with people. And I think a lot of the money is going to converge to a couple of the top players. I do think Li Auto will succeed. I think they also have significant state backing, as does Xpeng. I think those three will have a good market share in China at least. But the story is perhaps not quite as exciting here. Crowd has amazing revenue growth. I see you have that stock on your watch list, Philco. I think it's relatively cheap right now, Philco. Okay, thanks for throwing that out. I haven't looked at the fundamental numbers for that, but it is definitely an interesting one, Philco. Perhaps we could do a bit more deep dive into that over on the Discord. And speaking of the Discord, guys, if you want to get there, it's a fantastic community. Come and join us. It is only 50 cents a day. Lots of you guys are already on here. I know I'm talking to the converted, but a lot of other ones for you. You might want to check that out. The link's below, guys, and you get some really fantastic research here. And some of you are writing the kindest testimonials that I could ever ask for. And I haven't asked for them, which makes it even more fantastic. So thank you for that, guys, for all of you who are already over there. So crowd here, yeah, it's from a chart point of view, very little volume yesterday, right, on that day, which was a recovery, but on very low volume. You see that down here? The sell-off day was the red one, the little red bar down here, and then the green day yesterday was the positive. So not a lot of kind of oomph behind that. So we have to see. Navam, thanks for sharing that Jaguar in the UK has announced a 2-week shutdown on production due to chip shortages. And Kevin, good morning to you too, or good evening, whichever way around you look at it. CH, you are looking at NMGRD, Nouveau Monde Graphite, which I'm a rather unhappy holder of at the moment, but I think in the long run they'll do rather well. Let's see what's the news here on them. Biden oil wrap-ups. So you're talking about them coming out of OTC. I think that's what you're talking about there, right? So they are moving into the main market from OTC point of view. I think that'll be good for them. Now, there can be profit taking. Remember when Tesla joined the what was it, the S&P 500 in November or something, December? When was it, December? And, people sold off. People sort of buy the news, buy the rumor, sell the news, that theory. But I do think it'll be positive for any stocks because you just get included in a lot more indices, a lot more funds essentially have to buy you. Oliver, you're very kind. Juan here, what's your opinion on Clove, if you have one? Let's pull that up quickly as well. Clover Health Investment Corp. Wow, they really have been hit over the head with a stick. Eh? Is there any more recent news on that? They're just all the social buzz stuff, right? It's essentially it's funny really that they're sort of you become a short seller, you get hit by a short seller thing, and then you become a meme stock. Could life get any worse? They're going to investigate related to certain matters referenced in the article. So is there something to that? It does seem that at least if the SEC is looking into it, doesn't mean there's anything to it, but it certainly isn't a particularly good story to have here. Now, 16th and 19th of April, can you see the volume down here? What justifies that? What makes a stock go from 740 to 880 in a day? For me, as much sympathy as I have with people who sort of speculate, what's it all about? that's kind of thing. I like to buy things that I fundamentally think will do very well in the long run. And when you have this kind of volatility that is sort of unexplained, you get these massive jumps here in these bars. There's another one here, right? That one's also insane. You go up 30-40% in a day, and that's a regular day for you, then it just sort of becomes a very speculative thing. Because if you are not making that trade, if you are not the guys behind it sort of arranging that, upwards or downwards sort of crazy momentum, then you have probably about a 50-50 chance of making money. Demetrius says, do you think any other company will adapt battery swapping? Would be a smart move for Ford. You're probably referring to Ford's deal with NIO in China, that they're going to have access to NIO's charging network, their super fast charging network. I think so. I do think other companies will adopt it. I mean, BYD is doing it too, right? Buses and taxis in China are doing it too. In fact, mining kind of heavy duty equipment lorries are also battery swapping in China, because it makes a lot of sense for those kind of industries. So yes, I think they will. And I think there is a good chance that NIO might license their technology out, and that then other companies will be able to use NIO's battery swapping stations, which would also make a lot of sense from a using resources kind of smart point of view. Yes, there was a general short squeeze in the SPACs yesterday. Thanks for throwing that out. But for Clove, it already started days ago. Well, they had that's sort of, if you think that markets are manipulated or massaged or whatever you want to call it, then, when you see this kind of a pattern where, let me highlight that again here. Look at that. You get this rally up 30%, and then you get the same thing crashing down. And then the same thing happens again. And then, you're coming down again. I mean, it looks a little bit too coincidental to me. I think somebody is having some fun with that stock. That's the way I look at it. Dimitris, my pleasure. Robert, did you have a question that I missed? Do shout it out again. Copy and paste, guys. Sometimes I overlook things. Sophie, okay. So yeah, Chamath is, I think I put a video out 3 months ago or so on IPOE, criticizing something was Chamath rated, and I didn't get the warmest reception from the market, because to some people he's a hero, and I'm not saying he isn't. I'm not saying he isn't a wonderful man. It's just that not everything what somebody touches is necessarily gold. So I know nothing about this company, I must say. Absolutely nothing at all, but it is sort of a typical SPAC story. SPACs should be valued at $10, which is basically, that's the intrinsic value of the SPAC. That's the cash, right? That's the cash they have in the bank, and then it sort of goes up a bit on speculations of a merger with somebody or other, and then we've been seeing these kind of crazy moves where we go up, 100%, double or so, which sort of implies that you are acquiring a company really on the cheap, and that they are just going to absolutely perform incredibly. And that's what happens. And then people come back down to earth to sort of the halfway mark or thereabouts, $12, $13, $14, $15, which means you're still 50% above the cash value in the company. So you are pricing in a 50% return on whatever it is that they've done with that cash or are going to do. So this whole sector, I think at the moment, the juice, the kind of fun is slightly out of that, unless you are really a sort of more of a gambler than I am, perhaps, or there might be shorting opportunities. I suppose that's probably the more interesting play here. So I think it'll take some time for all of those SPACs to be recognized. First of all, they have to actually merge, and that merger has to be completed, and then they have to be recognized for the new companies. And I think at that point, some of these, the better ones, will start to perform again. But at the moment, they are all kind of hanging in midair there. UiPath, MC from Berkham. I haven't looked at that. No, let's pull that up. And you're saying ARK's been buying that. Okay, so it's just IPO'd. I love looking at new charts. So look, that's all we've got. We've got one big green bar. So what can we do with that? Well, we can look at it on a 15-minute basis, or perhaps even a 5-minute basis. And then what you always see after IPOs, you sort of see the stock wanted to find a price point somewhere in the happy medium, and that was sort of 68, and now we're flying up there. That doesn't necessarily mean that is the price point where it's going to stay, but it's you have very little information on where it's going to go. You can see this is now it's a 5-minute chart, so bear that in mind, guys. But you can see that we did have these 15 minutes here these ones. And with that, we had pretty nice volume. And now these 4 up there, up in the sky, we have virtually no volume at all down here. So that isn't necessarily a sustainable price point just because you're up there, because no one's really buying or selling up there. But no, it's, as a business, I must admit, I don't know all that much about it. They priced it here, software robot maker, notched at 43 to 50, and actually they listed at 56, so rather above that, which is, I suppose, good. It means they had a lot of interest. So, it sounds like an interesting one. You said that, okay, thanks for sharing what SPACs you're currently buying. Look, I mean, not all SPACs are bad. That would be sort of charring the whole sector. And in fact, the good SPACs are probably a good buy right now. It's just you have to really figure out who they are. And that's a little bit challenging because you haven't got financial data yet. So you have to kind of understand the target they're buying and really dig into their data and into their business and who's behind it, who are the backers, and how they capitalized and all those kind of things. And then, yes, I think there are opportunities, but at the moment as a sector overall, this is getting a little bit killed, a bit like, Chinese tech companies are just getting hit over the head for no particular reason. CH, we're hearing the phrase short attack virtually every single day lately. Well, it is a phrase that people have learned at the beginning of the year from the GameStop saga, and therefore people like to throw it out. It sounds very dramatic. A short attack is not necessarily the best way of describing it. When you have stocks that have 8, 10, 5% or so of short interest, it doesn't mean that that's a short attack. It's just shorting is a natural part of the market. So, you could say, well, perhaps the stock got shorted here, although more likely, I would say, in Palantir, for example, I think more likely people had perhaps margin calls. I think that's a distinct possibility. People bought up here at the high 30s, and then when you get to 31, or so, then you are you are 25% off. That's margin call land, and then that accelerates a sell-off. The short attacks, I think, are typically limited at companies that either have extremely high valuations and are sort of vulnerable from a story point of view, like what we saw with eHang, or they pick your sort of obscure. GameStop was at one point obscure, right? Sort of businesses that are kind of flagging not a lot of turnover, a bit random, and perhaps a slightly fading business model, or a risky business model, or a business model in a country where people have sort of a perception of less transparency. So those are the kind of companies they typically pick on. Alex, there are no stupid questions. I appreciate you asking that. And if you want to know a little bit more about technicals, I've put up some actually a lesson exactly for that purpose on our Discord Patreon channel here. Rather, I don't know where it is, but it's one of these here. FF Academy, I think I called it. Rather grandiose here, candles. And you understand that. And I think candles are super important to understand. And I explain to you why. So say we look at this enormous green candle here, and let me get rid of that line in the background. There we go. So actually, why don't we look at the one I'm pointing this red arrow at here? So how does this work? Well, it's a green candle, which means what? Well, it means the price went up. So it means the day started here at the bottom of that. That's an appalling line, isn't it? Okay, let me get a smaller arrow. So the day started at the thick part at the bottom end. That's the start of the day. And the close of the day was at the top of that thick part. And it was green because it means it went up in price. So we went from, so this is open and this is close, right? That's the world's worst C, but you get the idea. This thin line above and below, I sort of call them tails. That was the low point of the day, intraday, and that up here, let me see if I can write an H with this horrific pen. That was the high. So that's basically what each candle looks like. So open at the bottom here, close. And if it's a red one, you means you opened at the top here, at the thick part. You closed at the thick part of the red bit, and then the tails are just your intraday movements. SP, how do I ask a good question? They are all good questions. What is the next major support for NEO? Okay, let's pull up the NEO chart here. Where did our NEO chart go? I think we had it open. No. Where did it go? Here it is. So the next, at the moment, let me make this a little bit bigger. There is, from where we are right now, there is Fibonacci support at 38.69. So we are slightly above that thin green line here. That's quite a half decent one. And then really $40. I think psychologically above it's $40. That's where we need to get to. On the way down, 36.91. I put that flag on in here, this one, which is the next Fibonacci support, and also the low point of a couple of days here going back. Do you think NEO can break 40 today, Friday? I mean, today so far we don't seem to have quite the momentum here. What would we need? What would that be? So we need about 1.5 over 38.6. That's only about 4%. Is that right? 1.04 times 38.6. Yeah, it's only about 4%, so it's not a huge ask. But I wouldn't be surprised if it takes us a couple of days to get there. And then once we do, we have a chance to actually get up to 41.50, at which point I think we get some serious momentum here from another technical chart indicator here, our triple dip. Alex, okay, you're talking about this one here at the bottom. This is volume. Yes, it should... Yes, it should indicate whether we are buying or selling off that day. That's what it should correspond to. Absolutely. CH, yes, volume down here. The reason volume is important. So say when you have a rally and your volume's falling off, your volume's declining, you kind of know that rally is fizzling out, and vice versa. You have a sell-off and your volume is decreasing. You kind of know you're getting towards the bottom of the market here. So thanks, guys, for also throwing that out. Chris, where can you find the technical analysis on the Patreon? You can just go onto the Patreon page and either you scroll down all the way, or you could search for it if you want. You could search in technical. Just type in technical here, and that should find it. Here is one. Or you can use any of the filters, but yeah, sometimes searching is probably easier because we're getting up to a pretty substantial number of posts there, guys. So I think that is an interesting, Chris, sort of introduction. What was our other story? Actually, I looked at what the sort of billionaires were buying. Buffett, Ray Dalio, Soros, Berkowitz, Peltz, and Munger. Well, they've been buying in the last quarter, and I've made a benchmark sheet of this also. And again, of course, this is over on the Patreon. I've just posted it before this call, guys, so do check that out. I think there are some interesting buys in here. I think Schrödinger, for me, sounds like a very interesting company. It's a healthcare tech company. So they basically help predict how, and I'm no chemist, kind of molecular behavior happens in models before they are going into clinical trials. So they're helping basically drug companies. Here is their pipeline. They're basically helping develop drugs by kind of doing modeling before you get into an actual clinical trial stage. And they are working with basically all the big pharma companies here, Bristol Myers, who are some of the other big ones in here, so some of the more niche ones, and also some, Sanofi, etc. And they're seem to be working mainly on cancer drugs, and they've already had apparently 2 drugs got FDA approval because of it, and multiple programs have advanced into clinical trials here. And who bought this stock? Well, none other than Bill Gates, and he's perhaps a man who understands software and the sort of pharma space. So kind of an interesting one here. And if you look at the chart, you can see it had a real peak at the beginning of the year, and it sort of fizzled out a bit. So I think that might be quite an interesting one to look at. Price to book is 8 times, which is not massively expensive. I mean, I haven't really looked at the competitors there, but it might be an interesting one. Not yet profitable, but sort of it might be an interesting play. MC, you're saying the smart money post is not attached. Really? Okay, crikey. Technical glitch, which we shall fix right here, right now. Let me post that link in there. Save. Let's see if that saves. Hopefully it will. Yes, there it is. There it is. Thanks, CH. Thanks very much for throwing that out. The world's doctor. I think that's who you would quite like to be, right? Schrödinger is only known for its cat. Okay, MC Gracias. Adam, why do you think NEO is so volatile this morning? Well, let's go back to the chart. Where did our friendly NEO chart go here? Up 0.33% now. So it's bobbing up and down. Let's have a look at the minute by minute chart here since we opened. Can we move that up a bit? Can we move you up? No, refusing to. Disobedient stock. Here we go. Sometimes these charts are a bit funny. Is it that volatile? So we've moved down to 38.50 and up to 39, actually more than that, you're right. 39.60, yeah, quite a lot of volatility in there, it's true. I suppose some people are excited about all the announcements in the news and the massive growth of EVs in China and the Shanghai car show and all these kind of things. And then other people are, frightened of chip shortages. So I think that's kind of this sort of seesaw effect that we are seeing here. Tesla looks similarly at the moment. Here is Tesla looking similarly, a pretty similar pattern, right? You can see if you look at NEO and Tesla moving somewhat in tandem here. But it's quite nice to see that we are seeing it recover. It's not really I prefer even a minute by minute chart to zigzag up and down like mad, because it means there is a sort of a war going on between those buying and selling, whereas if you're just falling off, it's a different story. Rochi Boy SOL, you want me to look at that stock? Or is it just a very cheap solar stock? Well, most of the solar stocks are looking rather cheap at the moment, aren't they? We had something on our channel earlier. Where did that go? Robert, you posted something about solars earlier. How the whole space was basically falling off. Don't know where it's gone. Anyway, there was a lovely chart you made somewhere. Thank you. Big thanks also to SML Woon, who shared this live chat with our Discord. Thank you there. So yeah, I mean, the solar sector overall has gotten rather hit over the head, right, in the last couple of months. So the question really is it over? Is it done with? Or are we still in the midst of that? Let me pull up your Sol. That's a great ticker name, isn't it? If you want to be in that sector. So wow, they are still obviously massively up since last year, but since the peak, they are down 71%. That's pretty significant. And it is relatively cheap, of course, compared to where we were before. But we are kind of, we found sort of our support here at about where we are. And why do I say that? Because the lows you have here at the end of March, we are we are basically at that low at the moment. So that's kind of where we are right now is basically our support. We fall any lower and then we kind of revisit the sort of 830 marks or so. Robert's in the EV thread. Thank you very much for throwing that out. EV thread. Why can I not see them? Should be a car in front, right? Here it is, EV stocks. Okay, here, this is the solar stocks. What's been happening, and that's pretty much the same pattern we see here with Sol, though perhaps a little bit more dramatic for Sol than for some of the others. But yeah, it's kind of that's the whole sector story at the moment. So it's have we hit a low here yet? That's really the question. Now we have a sort of 3 attempts there on that chart to kind of go lower. You could call this also a triple dip if you wanted to. You could say this is dip 1, this is dip 2, and this is dip 3. But they are all at different levels, and it would require us to go up to about 1295 to about there, which would be the peak of the last rally. And that's about $13 or so. Now, you could move that a little bit lower if you were a bit more bullish to perhaps 1260 or so. And why do I say 1260? Well, some people look at only the intraday, the actual close of the trade, and the high point the opening on that day was $13 or so. So you basically should say, if this gets to $13, then we are actually, sorry, not $13, apologies. It's opening, what was the opening? 1267. If we get to 1267, then, we have turned around. That could be the real momentum there. People seem to think those are near noobs not taking the long play like us, says Gabby. Okay, and Vladimir is saying something is comedic about that. Vladimir, you're all about the comedy. I appreciate you for that. Thoughts on Yuxin, online used car sellers in China at inflection point, in my opinion. Yuxin, let's pull that up. Funnily enough, that's of course is essentially where William Lee comes from. Is essentially used car sales. Well, sort of a publisher of a used car sales platform. That's where he's coming from. We built some pretty good support around here, around the sort of 120. And now let me just see which direction our moving average lines are. So moving average lines still giving us a sell-off signal here. That pink swan in the background crossing the blue line there, that's a sell-off. And then yesterday we tried some really high highs and then we fell off again. And today we are doing a similar sort of story. So yeah, I mean, also massively volatile. I mean, that's just insane, isn't it? You think about a stock that goes from 130 to 166 in a day, that's some serious volatility, 15% or so volatility. So I think it's a lot more speculation than long-term investment that you've got going on in here. And if you go back in a bit in time, they are looking, well, are they cheap or are they overpriced? I suppose that's really the question. How high were they at one point? They were started off at sort of $10. So I would really look at fundamentals there. I would look at some serious numbers for, why are they trading, how they are trading. What are they called? Yuxin. Let me see if I can pull that up on something else. No, not on that one. Here, we can try it on here. You can see some financials. Let's start with analyst price targets. They are 280, but there probably there's only one, so you can kind of ignore that one. Financials, income statements, right? So going back in time, revenues were negative last year, so they are the business that's not strange. I mean, cost of revenue, okay, so gross loss 500 million. Operating income loss bigger than the previous quarter. Rather, these are quarterly numbers. Pretty substantial losses though. And then EBIT is $1 billion. Is that $1 billion? Yes. $1 billion a quarter, they're losing money. So then you have a quick look at the balance sheet and see how long can they keep going. They've got 219 million in cash. Receivables are only 458 million. And prepaid expenses, okay. So they've got $1 billion in current assets. Total assets 1.5 billion, including some long-term investments. We don't know what those are. And then long-term debt, 1.8 billion. Total liabilities, 4.4 billion. This company is basically bankrupt. Look, they have a negative equity of 2 billion. They're essentially insolvent. So I would run personally, unless some turnaround, some IP magic. If they own something truly fantastic, to me this is a run and hide situation. They are basically insolvent. Vladimir, that William Lee history video. Yes, I did write that down again because I started on that, but I haven't quite finished it. I will do that. Absolutely. I think it might be interesting to get a bit more background into the man. Thank you very much for that. And I have a better mic now, so it might sound a little bit better as well, Vladimir. Thank you very much. Sadly, YouTube didn't seem to agree with you that it was a great video, but I shan't be deterred. William Lee was an original investor for UXIN. They've switched to fully online, so lots of lost revenue, but are growing sales really quick again. Early next week in strategic partnership with JD Origin. Thank you very much for sharing that. Now, their revenue isn't growing, though. I mean, there might be numbers a quarter after this that I haven't got here, probably. Let's look at quarterly. So revenues last year, in December 2019, they were 461 million. So if you say they switched to online, fair enough. They moved to 61 million. So that's growing somewhat. There's probably a quarter or more there that we don't have. But what's the cost of revenue? The cost of revenue outstrips revenue just a little bit, yes. And general admin expenses is massive compared to revenue. Their operating income is like 2 times bigger than their revenue. So, yeah, I don't know. I mean, maybe JD is a long-term investor. If they're going to give him lots of money, maybe they can turn that around. But at the moment, the numbers are looking pretty abysmal. Gary Lau, welcome. Great to see you guys. Great to see you on the chat. Light theme on trading views burning my eyes, says Alex Peterson here. Some of you guys have strong opinions on whether the background should be light or dark. I still think the lighter theme is slightly easier to see. Perhaps just turn the brightness down a little bit on your screen if you can. Let's have a quick look on the day. Palantir is having a good day. So Alex talking, Sham talking is having a bit of an impact here, which is good to see. NEO slightly in the green here at 0.5. Tesla also just struggling to stay in the green here. Who is selling off? Well, GameStop, Sandal. They are kind of the meme stops here. Coinbase, which I think makes sense, and a little bit of banks here, MP Materials. Why don't we have a quick look at the market, see what it actually looks like here today. Any particular themes? Healthcare not doing so well. Not really sure why that is. Financials also not doing particularly well. I guess the 10-year bond yield is still too low for their point of view, and their point of view at 1.54. 10-year bond yield keeps falling. Isn't that amazing how the market overreacts and then corrects itself? And yeah, sort of a bit of a mixed market here, but not particularly terrible, I would say. Vladimir saying the only time I use dark mode on TradingView is when I'm about to make a speculative trade and I want to feel like a Russian hacker. Yeah, I think it gives you a little bit that sentiment. Origin, I didn't mean to sort of tank your stock there, so to speak. There might be information out there that I can't see. I'm just looking at a bit of financial data here without knowing the day-to-day business plan. So I would recommend you listen to the earnings call and do a bit more digging on that. But thanks for throwing that out here. International school, what is your skin routine? That's probably not strictly financial. It is absolutely non-existent. It revolves around having a shower and then that's it, basically. So yeah, that's my skin routine. Not a lot to that. Anita, Vladimir has the best sense of humor. He entertained us on his own all the way through the Volkswagen battery misery, 3 hours, 40 minutes of whatever that was. Lots of burgundy on Finviz. Yeah, it's sort of neither red nor kind of green. I agree with you there. Very few stocks sort of popping here. AT&T is popping 5.26%. That's pretty much it. Anyone really selling off here? Micron is selling off, which is kind of strange. And anything else massive here? Some of the mining plays, Rio Tinto, BHP, that might have to do with the continued Australian-Chinese strains. I'm not sure, though. It might. But other than that, okay, this has NEO down here as a fraction, but if we look at the actual live screen, second by second, NEO is actually up 0.44%. Gary Lau, thanks for the smart money benchmark on Patreon. Anything that jumps out to you, Gary? I have actually recorded a video on this, Gary, as well, which I'll put out afterwards. I don't have time to upload it yet. I actually thought that the Bill Gates investment looked particularly interesting. Sort of a software company that helps drug manufacturers model molecular things. That's how much I understand about chemistry. I think that might be quite an interesting one to dig into. Albarello, nice skin because he's vegan. That could be it. All good. Main reason I invest because the Chinese policy is Origin, yeah, I think there is a play, obviously, for the second-hand car market, and the whole thing going online. You are quite right there. CrowdStrike, I think we looked at that earlier, didn't we? Wasn't it Philco who threw that up earlier? Crowd. Actually, why don't we use? Where did that go? We can have also quick look. I'm rather a fan of this new tool, Koifin, at the moment. I think it's quite interesting. You get quite a lot of sort of quick. I don't know whether Finbox or this one is better. Let's have a quick look at what the analysts are saying. This one's a bit more visual. It's a bit prettier. So we are below the average price target. You can see that here. I think just about the colorful line here is the stock price, and then the mean stock target price target is the line above it. So it seems from that point of view relatively appealing. Let's have a quick look at if there are any massive news stories out today. These are from yesterday, where hedge funds write about piling into CrowdStrike holdings. So we see some of the hedge funds moving in there. I like these drawings. Insider Monkey. Okay. This is just one of those automatically generated articles that tells us absolutely nothing at all. Oh, sorry, that wasn't CrowdStrike. Graphs. That's what I wanted. Okay, from a technical point of view, probably easier to look at on the other one. Probably pretty good momentum, right? I mean, from looking at that, we can also, without the U, have a quick look here at a couple of indicators. RSI. So that's looking pretty positive here. We are above the 50-point line, so a nice buy signal here. That was on the 7th of April, which wasn't bad. Oh, that was the wrong line. I wanted, nope. Can I get one? Oh, they're very, very faint and green. So now I've drawn lots of lines and I've confused everybody. There we go. That is so faint, no one will ever see that. There it is. That dotted line is basically the buy signal from the RSI. I imagine the stock is too quick for it. Williams R was a little bit earlier, so that's a little bit better. That's, I think, always a good thing to do is throw out a couple of indicators, and then you can see the one actually that suits the stock better, historically speaking. So, yeah, looking very positive momentum there on CrowdStrike at the moment. Have you spoken on Alibaba yet? It's Chinel. Not yet. We can definitely do that. I'll do that just in a moment. Origin, yes, do let us know. Absolutely. In a couple of days or in a week or so, how you're getting on there with second-hand car market in China. For what price would you buy Coinbase today? Would you not buy it even at a good bargain? I mean, it's a tricky one, because if you look at, I did a valuation of it before the IPO. Let me search for coin here. Coinbase. No. Where is it? Can't seem to see it. Here it is, Coinbase, which, I suppose that, sort of where we are right now, really, it isn't particularly expensive if you're bullish on the business. 19 times revenue multiplier, if you're assuming quarter 2, 3, and 4 will be as good as quarter 1. Or, we actually be lower than that now. I suppose the one big risk is really that institutions pay a tiny fraction of the fee that we pay as retail users, right? So we pay, say, near a percentage point, and they pay 10 basis points. So they pay a teeny tiny amount. if there's more competition in this space and more of us get access to cheaper rates, there should be pressure on the Bitcoin particular trading margins. And that is more than 95% of all their profitability. So they could have 10 times the revenue, but still have the same profitability as now. I think that's a possibility in the future. I think also a lot of what the SEC is going to look into with respect to Bitcoin, who are they going to go after? Well, Coinbase, because they're listed in the US. I think those are the two risks. I could live with that risk. I didn't like the fact that the CEO sells at the high point at 380 or whatever on day one. I just don't like that fundamentally at all. And I can't seem to see a real reason for him doing so. So that kind of really puts me off, I must say. So I'd rather take the money and put it into crypto directly, because I still get the same exposure and I haven't got this sort of risk of competition and lower margins and, you know, crazy CEOs and all these kind of things. Gary Lau, your wife keeps asking where Mac Jar is. Well, yeah, didn't have a great day again today, right? In Hong Kong, Alibaba, and not having the greatest. Well, actually, we are somewhat positive here. Is that still true? On the live chat, I'll always have to pinch myself when I see a green number for Baba. Yeah, up 0.73%. So having a bit of a recovery here. That'll be the quadruple dip or something. 1, 2, 3, 4. It'll be the 5th dip in a row. So I'm not reading much into that. I mean, part of it is just, I think the whole Chinese tech sector at the moment is now under the overhang that Baba was under at the moment. Of course, it makes absolutely no sense for the stock price to be there. Look at the numbers. Talk to Charlie Munger, and you know he'll tell you where it should be. We are still basically bobbing around this sort of 230 is better than 224 or 225 we were bobbing around before, but you know $6 isn't quite the upside we were hoping for. It is a strange one. I mean, I think also the continued sort of animosity between US politicians and China, that definitely doesn't help. So it is really one for the patient. I think it really is that. I think in the long run, fundamentals and profitability and margins do win. But in the short run, I think this isn't going to give us a great deal of joy here. Can you make some more TA videos for the Patreon, Chris? Okay, thanks for that feedback, Chris. Check that one out. I am also working on a course, and I'll throw quite a lot of TA into that too. So hopefully I'll finish that by the end of the week, but it does take a little bit of time. Are we looking at 5 green days for NEO? Well, that can't possibly happen, right? Those sort of things don't happen to good stocks. Let me close a couple of these. Too many windows open, you get confused. NEO here. That's the 1 minute chart, so just to really throw you off there. And this is the crazy chart, and there we have it, looking a little bit more. Everything is going nuts today. There we have it. So yes, we are seeing a genuine effort at a recovery, which is similar to what we saw after the dip number 2. And we kind of need that to go back up to 41.57, and that would prove our triple dip, and that should be a positive momentum story there. Chris Jones, how much is the course? I'll tell you once I finished it, because I haven't gotten that far yet. I've just recorded about 20 lessons or so far. And I'm trying to make it into a coherent mess on a kind of, not basic things, but sort of like portfolio allocation and how to invest, kind of more some of the fundamental things, some technical analysis, how to look at financial statements, income statements, balance sheets, all these kind of things, to kind of throw it all in the mix in a way that people will understand who know very little, and people understand who perhaps are more experienced and would still find it interesting. So that's kind of what I've been doing a bit on the side when I'm not recording or not live here. So we are getting there. I think by the end of the week it should be wrapped up, and then I just need to sort of package it and find a way to put it online. Thanks, guys. Thanks for throwing that out. So I think on that note, probably we can have a quick recap here. The stock market generally looking pretty happy, right? A lot of the Chinese stocks are up here. PDD is up. Palantir is up 1.8%. I have to pinch myself when I see Palantir and Baba green in the same day. BlackBerry's up. Filco, you'll be happy. Baidu continuing its recovery here. Really, most things looking relatively happy. Netflix still suffering a bit from their slow subscriber growth. Okay, Tesla down 0.5%. That could change throughout the day. That's not substantial. And then just coin not really having found its bottom yet. I think the CEO is selling off there. Not the best story in the world. Thanks very much, Guide Muscle. Great to have you on the chat. I haven't seen you here yet. Is Kathy Woods buying 10 cents? Pykyat Go, good to see you on the chat here. Let me pull up what was the buying this morning. Hang on. ARC. Here it is. This is the buying this morning, which I tend to share with the Discord, at least the more interesting bits. So what is she saying? Oh, here, a UiPath. That's what you're throwing out earlier. I see where you're coming from here. Buying fairly substantial bits of that. And she's selling a lot of pharma companies. Perhaps the kind of rally there is out of that. Selling a bit of Tesla, but that is, almost 12% of their holdings. So you can understand why they're doing that. Continues to buy NIU with a U. I think that is an interesting company. And buying Tencent. And she has been long Tencent for a long time, which is interesting. And buying Peloton. So taking advantage there of those dips from those unfortunate events. PDD also buying that, and she continues to buy Coinbase. So they really stick with stuff. I quite like them for that when they made other conviction here. Also Meituan. So they tend to buy things, I think, that are a little bit down, that have a little bit of negative news hanging over them, and then they hold on to that for long enough so that they make a profit time there. NIO, yeah, I have looked at NIO a little bit, Brando there. It's an interesting company. It definitely, e-bikes is a big item, in a lot of markets. They're basically affordable. You can buy them if you can't afford a car. My slight concern in the long run is that I think governments are not going to love it. If you've been in Ho Chi Minh, for example, you see what happens when everybody has a bike. It is kind of madness. Beautiful, wonderful city, but crossing the road is like taking your life into your hands every single time because, they're just swarming around you like sort of happy bees. Funnily enough, they never hit you if you just keep walking at a steady pace. But, it causes traffic congestions of a different sort. And it can be quite disruptive, certainly, to car flow. So I think that's potentially an issue there. But guys, on that note, I'm going to wrap it up here. Lots more goodies coming out in terms of videos today, so make sure you are subscribed if you are not. If you have any more questions I didn't get to, ask them over on the Discord. The way to get there is through the Patreon link below, guys. And thank you very much for tuning in. I love you all for subscribing. We have broken through 17,000 subscribers, which is just fantastic, guys. So see you on the next video, and thank you for tuning in.